Hey Jeff, thanks for joining me.
Hey, Steve, thanks for having me again.
Good to have you. Today we are talking about a contraction in construction around warehouses, some weakness in that space. Certainly industrials made a lot of headlines as data centers are getting built as fast as they can make them and still having like record low vacancies or not used. So that sector is surging in industrial, but the warehousing sector, we're seeing some weakness. The amount of industrial real estate under construction in the third quarter fell to 309 million square feet. That's down 43% from the previous year. Steepest drop since 2008, according to Cushman and Wakefield. Vacancy rate for industrial real estate climbed to 6.4% in the third quarter, up from 4.6% in the same period a year earlier, highest quarterly level since end of 2014. And we're seeing kind of that demand across the sector. Warehouse operators have shedded a seasonally adjusted 11,000 jobs in September. So, after really a lot of enthusiasm, a lot of building, we're finally maybe seeing things cool off a bit in terms of warehouses. Your thoughts?
Look, it was kind of the same thing we saw with multifamily a couple of years ago, where it was hard to understand how anybody's buying at a 4 or 5% cap rate. Well, this one was even more difficult to understand. You're building a building that's either let's just say tilt wall construction, but a lot of it was metal building with a concrete base, and hard to understand how you're buying a 4% cap rate building that has. I mean, sure, maybe it lasts forever to some degree, but it's nothing more than an oversized shed, and with a lot of extra electricity running to it, and somehow that's going to equate to a 4% cap rate for a very, very long time. I don't know. Just never really made a whole lot of sense to me. But and also depends. A lot of these bigger warehouses were also were suited to fit either one single or a couple single very large tenancies. And at some point, those tenants need technology and need new things, and putting them in a long-term space doesn't always work for them.
Yeah, I agree. I mean, this was a sector we kind of looked at and scratched our head because the prices you were having to pay for it and the underlying fundamentals really didn't seem to match
Right.
the prices you're going to have to pay up for the buildings. It was just too much optimism, too much enthusiasm. I think some of this was during COVID. Everybody was locked up. You couldn't travel, you couldn't go to restaurants, but you could get on Amazon, you can buy stuff. And we certainly also saw a shift around an increasingly online economy of shipping things to people's doors and whatnot.
Right.
Some of that's a lasting structural change, but some of it was a bit temporary also, right? Because we aren't all going to be locked up in our houses forever. And now that we're not, we've been traveling more, doing more services, doing more restaurants, and some of that over enthusiasm. I think you're now seeing people got a little bit ahead of themselves. Again, not a sector that, given just how expensive it got in terms of valuations, in terms of quality of product that we were active in. But it is an example of you just can't follow the herd because sometimes the herd goes off a cliff. Not saying this is going off a cliff here, but some of these properties are going to turn out to be bad investments because people overpaid into a sector that had a little too much hype.
Yeah, I mean, look, there again, when everybody's kind of running towards a sector or an industry, it's probably one of those things where you should be looking at what they're running towards, and maybe why you should be looking at what they're running away from. This is one of those things where I don't think people are really running away from. I don't think that they were necessarily bad investments. It becomes a supply and demand discussion, which is there's a ton of supply, not enough demand. And the reality is, where I was kind of hinting is you're buying a property at a premium, and at the time when you were buying it for the premium, they were getting premium rental rates, and now you're going to have to get really, really strategic and how you keep those tenants. Not only keep those tenants, you're probably going to have a reduction in rental rates because they really were just premium rental rates caused by kind of a black swan event. So I think it's going to be interesting to see how it all falls out, but. Do I think it's going to be murder in the streets? No, but there's going to be some drop off, and there's going to be some time until until that space gets occupied. But with time, everything, let's just say with time, everything will end up growing. We'll see what happens.
Yeah, I think the irony here, in a way, is we're probably more likely to be buying in the space now than we were before.
Yeah,
There may be
strategic
some.
buying,
Yeah,
right?
yeah.
Like,
Well, because I mean, if we find a really quality property that somebody got in over their head, that they modeled out that, they paid too much for it, they were expecting to get rental rates that they're not going to get, but it's still a quality property and they have to get out from it, and they're willing to sell at a discount. That's the sort of thing that could maybe interest us. So, I think you have to always be careful. When things are going up, don't assume they're going to go up forever. Be careful not to overpay. But when things are going down, sometimes there's some opportunities there. If you can buy a quality property from somebody who really had a bad model, and now is forced to sell, that can be an opportunity. So, not saying we're going to be buying any warehouses tomorrow, but wouldn't surprise me in the next year or two if one shows up in our investment portfolio.
yeah, and I mean, look, we also have colleagues that are in this industry that that this is all they do. And some of them have gone a little quiet, and then the other side is some of them are still actively buying. We know what we do, right? Like we're not going to shy away from an opportunity, but for some of our and some of our viewers, investors, that this is all they invest in. We're happy to discuss this. We're happy to refer people to places where we see opportunity as well.
All right. Thanks a lot. We'll be following this, see if we start seeing some bargains pop up in this space. So in a way, we're kind of rooting for more weakness and more problems because we like good buys. Hey, thanks for the insights, Jeff. Give us a thumbs up if you enjoyed the video. Subscribe if you haven't. Comment and let us know what we got right or wrong. And visit our website, selectfincap.com, and register for our weekly newsletter, where you'll also get information on exclusive real estate investment opportunities, possibly in the warehouse space if we see a good deal coming in the future. Thanks a lot, Jeff.
Thank you.